Did you know that Ethiopia is the third largest economy in sub-Saharan Africa with a projected growth rate of 8.45% for the coming year? This impressive trajectory positions Ethiopia amongst the fastest growing economies in the region, driven by ambitious economic reforms, strategic investments, and an increasingly vibrant private sector. A key milestone in this journey is Ethiopia's recent establishment of its capital market, marking a significant step towards modernizing the country's financial sector. In this episode of Ethiopia in Focus, I'll be speaking with Hana Tehelku, Director General of the Ethiopian Capital Market Authority, about the development of Ethiopia's capital markets and their role as a critical tool for driving economic transformation and attracting investments. Hana, welcome. So we noticed that increasingly on the African continent, policymakers are recognizing the importance of setting up domestic capital markets, particularly to propel economic development and to finance priority sectors. We see this also being prominent in Agenda 2063, where as part of efforts to increase domestic resource mobilization, Agenda 2063 is also encouraging the expansion of capital markets across the continent. Ethiopia has been undergoing that process of setting up the Ethiopian capital markets. Why now, and why did it take us this long?
Yep, thank you, Pilani, for having me. Capital market basically doesn't stand by its own. But as you know, historically speaking, we have a capital market. We had an effort to establish a capital market in Ethiopia back in the days.
Just the beginnings.
Just the beginnings, just a glimpse. We have seen just a glimpse of it, but it wouldn't come to fruition because of the change of regime. From even that history, you can understand that the development of capital market is highly related with the broader social, economic, political standings of the country, the government, and even it depends on how the government sees the private sector, the role of the private sector, how much role the private sector should play in the economic development of the country. So that has been one of the issues of why we haven't set up a proper capital market in Ethiopia with a regulator present, with backed by technology and recognized, capital market intermediaries and other participants.
And just to clarify for people who do not understand the context before, in which era did we try to start the capital markets and what had transpired after?
It was Haile Selassie's era. When the effort to establish capital market was started, but with the introduction of the socialist regime by Derg, that effort was, I'd say abolished, and then we haven't seen any effort to establish a regulated capital market. But even within that time, especially after the fall of Derg, there was an effort of share issuances by share companies. We can see like the Ethiopian local retail commercial banks. We have over 30 banks, 18 insurance companies, and other financial sector and non-financial sector companies. But the effort has a lot of problems. There was a study by Ministry of Trade and Regional Integration as to the completion of this process, what has been the problem regarding the raising of shares and establishing share companies. One of the biggest issues were the issues of investor protection. A lot of people were victims of fraud. They've lost their investments to unfaithful investors. So that requires the establishment of a centralized regulator. That's the Ethiopian Capital Market Authority. And we can't imagine an effective functional capital market without technology. You want to reduce the cost of capital formation. You want to have easy entry and exit from the market. So you would want technologies to have like an efficient and functional capital market. So that's why this effort is being done now.
But just to further explore, I mean, we'll get to what's being done, but just the necessity of having a capital markets at this point in time. Maybe you can expand a little bit on what it would provide by playing to the current context.
Yes, even the capital market really resonates with the current government's idea of private sector-led economic development, resilient capital market, resilient economy, a sustainable economy, a financial inclusion, because capital market is a great tool of financial inclusion. When we, previously when we talk about financial inclusion, we usually think about the banking sector having a savings account, maybe having a wallet account through a digital banking system or different, kind of banking services. But that does not really give the investor the actual benefits that they deserve. So that's how the capital market resonates with the broader economic vision of the current government.
Okay, so fast forward to where we are right now, and over the past year and a half, there has been movements for the establishment of Ethiopia's first capital markets. What has been done so far in terms of bringing this to fruition?
When I talk about the development of capital market in any jurisdiction, I'd like to borrow one of the analogies my colleagues usually use. It's a capital market is like a tap water. Once you have all the necessary development and infrastructures in place, you can just have your water at your house, in your bathroom, or maybe living room. When you open the tap, you have the water. But before that, there are a lot of works behind it, maybe years of works, a lot of investments, a lot of people should be involved to have that tap water in our house. The establishment of capital market, the development of capital market in any jurisdictions involves different efforts to establish different moving parts of capital markets. Capital market involves the functional capital market needs a proper regulator, trusted intermediaries, technological platforms, exchange, and diversified investor base. So to have that, the government has been doing a lot of
the groundwork in that.
Yes. So the groundwork, the cornerstone of that groundwork, I'd say, is the Proclamation number 1248. That's, I'd say, the parent law in Ethiopia for the establishment of the necessary institutional frameworks. And of course, that birthed the subsidiary legislation that are very important to have a functional, a vibrant capital market in Ethiopia. So this proclamation, the Capital Market Proclamation, introduces basic and important institutions like Ethiopian Capital Market Authority. Ethiopian Capital Market Authority is the first regulator of capital market in Ethiopia ever. Like, we have never had an institution like Ethiopian Capital Market Authority. It's entrusted with safeguarding the interests of investors, maintaining fair markets. It has also a market development mandate given by the proclamation. We have also another very important introduction to Ethiopia's economic development, I'd say, the Ethiopian Stock Exchange. It's the first stock exchange in Ethiopia, as the authority is the first regulator in Ethiopia. The exchange, as I have told you earlier, technology plays a huge role in the development of a functional, vibrant capital market that actually contributes to the economic development of a country. So the Ethiopian Stock Exchange was established by the proclamation, and the proclamation opens up a modality of public-private partnership, and the Ethiopian Securities Exchange was established by public-private partnership. We have a lot of private investors in it. We have government investing in it. We have foreign developmental partners investing in it. That shows, in one side, the commitment of the government to establish the capital market. On the other hand, it shows the confidence of the private sector with the prospectus of capital market in Ethiopia. Even as a developmental partners, like different developmental partners who want to deepen financial sectors in Africa, have involved in the development of Ethiopian Securities Exchange, and they have even invested in the exchange. I'd say this shows the confidence of the participants in the prospects of capital market in Ethiopia. The other one would be the effects that shows like we're moving towards establishing a functional capital market would be having the subsidiary legislations that are necessary to bring about the necessary moving components of capital market. For example, after the introduction of the proclamation, we have close to 4 or 5 directives by the Ethiopian Capital Market Authority that governs issuers. This directive is the Public Offer and Trading Directive. We have another directive regulating capital market service provider. We have another one for the regulation and licensing of exchange, over-the-counter markets, and derivative markets. So these components will eventually and inevitably help us to set up the proper, institutional regulatory frameworks that are necessary to build, of course, a functional capital market.
So Hana, maybe you can expand a little bit, because the effectiveness of any regulatory environment is its implementation. So what preparations have been made in terms of making the regulatory aspect effective?
The first effort, I'd say, is to build the capacity of the regulator itself. In terms of having enough staff, adequately skilled, and having continuous trainings in the capital market. As we have been discussing, capital market and its operations is very new in Ethiopia, and its development is also nascent here. So we want to be in a continuous capacity building internally, including the management, we have senior technical advisors. We've brought them from different walks of life. They've been in different jurisdictions, working closely with capital market regulators in different countries and jurisdictions. So we have those technical assistants, and they are sharing their knowledge sustainably to the local staff, even to the management. So we are in a continuous learning process to understand the market, how it operates, and how to better supervise and regulate it. The other one would be to increase potential intermediaries and capital market service providers. I'd say as a regulator, Ethiopian capital market has done a very extensive market development work in the past couple of years. We have done a lot of engagement individually with potential issuers, potential capital market service providers, even potential investors. When we think about investors, we have retail investors, individuals from different walks of life. We have institutional investors. Pension funds play a huge role as institutional investors in any capital market. One thing, it shows, the confidence of local institutional investors who have a lot of resources to invest in their own domestic capital markets. Because of that attracts a lot of international investors into the jurisdictions and to invest in the domestic capital market. So we have been having conversations, trainings with different, possible and potential investors locally. Even internationally, we've been traveling in different jurisdictions to showcase how Ethiopia has promised, delivered in its I'd say policy promises. We've been promising about a comprehensive economic reform. We have delivered our promises.
Consistent to those promises.
Exactly, consistently delivering on our promises, including the broader economic reforms, the promise of establishing a functional capital market, even components of the capital market, not just, having, the ideal, just, saying that we've established a capital market, but meticulously planning of each component of the capital market and actually executing those components of capital market. So we have been doing those extensive market development works. And in terms of, technology, we've been working...
I was just going to say, because you had mentioned it earlier, so what is the role of technology, particularly in enhancing the effectiveness of your regulatory, tasks?
To be honest, especially in this digital era, I don't think there would be any effective functional capital markets without the involvement of technology. Technology plays a huge role in terms of increasing efficiency, reducing costs of transaction, and having a very agile capital market regulator as well. The exchange, as I have been mentioning, the exchange is set to provide technology-based trading platform. The intermediaries like brokerages use technologies. We have also introduced some technology-based service providers. I can give you some examples, like even AI-embedded technological service providers like robo-advisory services. You can use AI tools and, provide AI-supported investment advisory services. You can think of like a digital sub-brokerage service. It could be like providing applications on your phone to retail investors to have access to the trading platform, to place their orders, to place the sell and buy order of securities. For the Capital Market Authority as well, we need a technology that have eyes to the actual tradings that are happening in different technological platforms by different participants of the market. You have the exchange with the trading platform, you have the brokerage service with the brokerage back office system. Their regulators need to have eyes, not a manual, human eyes, but a technological eyes. So we're procuring a multi-asset market surveillance system, which will be integrated with the automated trading system and the CSD. The CSD is one of the new additions.
CSD being?
CSD being a Central Securities Depository, which is a centralized clearing and settlement system of securities. Once a person wants to buy or sell their securities, we need to make sure each participant have the necessary resources. The person selling the shares, we need to make sure they own the shares. The person who are intending to, buy the shares, we need to make sure they have the necessary funds available in their respective investment accounts. So that should be done automatically in, a very centralized way. That will give you, even in terms of having like a policy basis of data, you'll have the trading system, you'll have the Central Securities Depository. So we have been trying to incorporate technologies, up-to-date technologies to support the capital market building efforts.
So aside from the synergy on technology with the ESX, because it's another institution that's information as well, and people have the tendency to look at it in silos. What is the nexus and the synergy with the Ethiopian capital markets when it comes to the ESX?
Historically, they both have been established as capital markets project office. A lot of the staffs that are working at ECME and at ESX have been working together for, I'd say, the past 3 years. So historically, because they have been sitting in the same office, working together, studying the Ethiopian market, what are the gaps. So that helps us to build a very, very good relationship and having synergy towards that. But in any jurisdictions, the regulator should closely work with the exchange because the exchange provides the platform, and the authority, of course, regulates the trading system. And the regulatory frameworks for the capital markets provide a pipeline of services, products to the exchange. If we don't register securities and companies are not coming to the capital market, the exchange wouldn't have companies that would be listing on the exchange or maybe trading on the OTC over-the-counter market. So both companies, I'd say the authority and the exchange, are very complementary by nature, in their inherent natures.
So let's reflect a little bit, because earlier you had mentioned when we're talking about why now, why were we a little bit late, you had talked about the fact that we've had share companies before exist. Currently now with Ethiopia's broader goals of economic development and industrialization, how does ECMA's entry into this kind of context and this aspiration for accelerated industrialization and economic development, how does it factor in?
As I have told you earlier, even issuance of shares has brought us about more than 30 banks, more than close to 18 insurance companies and other financial sector companies. One of the supporting factors for these companies to be sustainable is that the presence of a primary regulator, that's the National Bank of Ethiopia. But on other sectors, there have been, as I've told you earlier, it is backed by a study from the Ministry of Trade and Regional Integration. This effort has not been successful because of the non-existence of a centralized regulatory body. So we want to transfer that success in the financial sector to multiple sectors that are necessary for the Ethiopian economic goals, especially the industrial sector, the digital sector, because capital market
priority sectors that have been identified for this.
Sure, exactly. Because I understand and I acknowledge why banks work the way they work. We need to have risk management frameworks in place. They kind of have to choose the loan recipients. They might need collaterals because you need to protect, the broader financial system. If you don't have those systems in place, I'd say the finance sector might collapse. So I understand why the banking sectors are working the way they are working. But we need a diversified and long-term source of financing. This kinds of industrialization, priority areas, infrastructure building needs a long-term financing. And capital market plays a huge role in that. A simple definition of capital market would be, raising a long-term capital. Because you'll have a diversified base of investors with different risk appetites and different preferences in their issuers and investors. So that would bring about this kinds of support for this vision of priority areas of economic development. And for example, I'd say if you take bonds, they'll support infrastructures like roads. That will definitely help industrialization or other priority areas.
Essential services as well, in terms of social.
That will facilitate, for example, logistics. Logistics is very important. It's one of the areas the government is working on. Once you have bonds, for example, let's say we have issued a bond for building a railway from a certain very important jurisdiction, let's say it's a mining sect, and to bring it to export it to the foreign destination. So that will help and facilitate the logistics. It brings about the components of the economic development in the priority areas, and that facilitates the economic.
I remember a few years ago in conversations around the business environment in Ethiopia and the potential for existing businesses to scale, because there was always a sense that businesses were fragmented, their sustainability models were never really thought out, and a lot of the times it was capital that was always being raised as one of the issues. So with the entry of the capital markets, in what sense would it support this? Because you mentioned about allocating or providing, and at that point they used to talk about pooling resources, pooling private sector resources as one way to, elevate and sustain a lot of these businesses to a different scale. So what does it add in terms of the capital markets?
Yeah.
Not what it adds, but how would it reinforce even further the scaling up of businesses, not only new entrants, but existing businesses?
Yeah. As you have rightly mentioned it, one of the issues by startup companies, SMEs, and even established share companies to expand their businesses is capital. To give you a highlight how important capital markets would be, and even mobilizing savings towards this kind of productive investments, I want to give you some statistics I have read in some research from European countries. We would assume they'll have more mobilizations of savings towards investment. Of course, they have done it for a long time. But one of the studies shows that if it's a study within 25 European countries, including France, Greece, Italy, Spain, you name it, 25 countries, only if these countries collectively move 5% of idle savings of their citizens, their economy would have access through the capital markets close to 1.6 trillion euros just for investment purposes. This money will be channeling to their companies.
Just from the 5% mobilization.
Just from the 5%.
And we have a lot of that idling as well?
Yes, we do. Yes, we do. Even with the existing savings amount, we'll have a lot of resources to mobilize from savings to investments into these companies. And these companies are from diversified sectors, as I have told you, and especially innovations. They are not typically the ones to be financed by the banking sectors, as I have told you, understandably so, because they have their own standards and regulations in place. So this mobilizations of savings into these sectors, of course, would solve the capital issue these companies have.
And it's spurring innovation as well in that regard.
Of course. Capital markets usually is associated with innovations, as people can do whatever they want with savings. You can spend it wherever you want. So if you want to spend it in innovations, you can. But the banks, even if, the bank or maybe the officer, even if they want to, they have regulations in place, they wouldn't do it. So it will definitely foster innovation, entrepreneurship, new investments. Some of the products basically support the basics of life, and innovations would be encouraged to that effect.
So let's talk about investments, because you started international investments and the entry of the Ethiopian capital markets. What guarantees does it offer them, and what opportunities does it offer international investments?
The good thing, I'd say, the capital markets, the development of its regulatory frameworks is the first effort, I'd say, concrete measure of the government to open the financial sector for international investors. The capital market has started as open as it can be. It's open for international investors, even as, when we say investors, in the capital market ecosystem, it's about the people the institutions and the individual people that bring their savings and resources and invest into the companies. But I want to discuss it in a broader way of it. It brings foreign issuers, foreign companies, to have access to Ethiopian, as I have told you, to mobilize local savings into their investments. And it also brings about international capital market service providers. Because we don't have capital markets for long, we lack the skills, knowledge and related technologies to the capital markets. So they can come to Ethiopia as capital market service providers. It's open for anyone who wants to come and be a capital market service provider in different modalities. They can come as their own, they can establish branches here, they can partner with local financial sectors or local consultants or any companies in Ethiopia. So in terms of bringing international actors in Ethiopia, I'd say we have different modalities. But in terms of building even domestic and international investors, the Ethiopian Capital Market Authority, and with the introduction of the Capital Market Proclamation, the ecosystem fosters transparency and information, timely information disclosure.
And that's critical, because I was also going to ask you to expand a little bit more in terms of investment protection and transparency for international investors as well as domestic.
Yes, because it's not, the financing in the capital market does not depend on a conventional collateral, be it real estate, it could be like vehicles or some land or something like that in different jurisdictions. It doesn't work like that. It depends on the information you need to provide investors. It could be domestic investors, international investors, institutional investors. The ecosystem, the market should provide adequate and timely information for investors to make an informed decision. They can make whatever decisions they want. I usually say the purpose of Ethiopian Capital Market Authority or any regulator to be honest, is not to protect the investors from the risks of business or the risks of investment. We want to protect them from risk of fraud. Businesses, investments always involve risks. So investors need to have an appetite for, they can have different levels of appetite for risks, to be honest. You can have like a lesser risk, you can like see, compare it with your benefit, or even the not financial benefits, but greater benefits capital market would provide. For example, if we say like green bonds, if you are like a climate change enthusiast, you can buy green bonds, not just for the money, but for the causes. So we don't want to protect the investors, and I don't think it's our place to protect the investors from risks of investment. But we don't want fraud to happen, and we want to be agile and proactive if fraud happens, to detect it as early as possible before it poses any systemic risks, and to take the necessary measures. So I'd say we have all that components in place. I can give you an example. Like, for example, the Public Offer and Trading Directive, which mostly regulates issuers. It regulates the way they do the offers. When they do offers of securities, they need to do like registration of statements, which comprise of prospectus, which comprises of other accompanying documents. There have been a mention of prospectus in different existing regulatory frameworks like the Commercial Code, but the components have been limited, and they don't give adequate information to investors to make uninformed decisions. But with this directive, we have over 15 components of prospectus. The issuers are required to disclose who they are, information on the issuer, the governances they have, why they are offering the securities, if it's a bond, if it's shares, and how much money are they raising, and to what purpose are they using that capital, and what risks the business involves. If you read the Ethio Telecom's prospectus, you would see like a section on risks, risks of the business, risks of
this is the prospectus that has been recently released for the sales of shares.
Yes. So, it provides the risk factors. So if you want to understand the risks of that particular business, you can go to that risk sections and read it and say, no, I don't have the appetite for this risk. Or you can say, that's fine. It's a piece of cake. I can take this. You can compare it with the prospects of your investment. There is a discussion on the regulatory bodies, regulatory frameworks, particularly for the issuers and the sectors they will be, involved in. So with the introduction of this whole components of the prospectus, the investors will have enough information, and the issuers will have ongoing disclosure responsibilities, just because they have access to public resources. In principle, nobody have access to another person's, pockets. You don't have access to my pocket. If you do, it would be a crime. You can't access my pocket. It belongs to me. But if we allow issuers to access public resources, people's pockets and savings, we need to put these measures in place. In terms of ongoing disclosure requirements, they need to do periodic reportings every 6 months, non-audited financial reportings, and we also have non-financial reporting duties.
And what happens to defaulters, those who do not comply?
The proclamation provides criminal responsibilities, and the directive itself have administrative penalty sections. Depending on the violations of this capital market actors, they will have different layers of penalties involved.
So Hana, we're a few weeks away from ringing the bell. How excited are you about that, and what preparations are being done in the immediate, particularly in terms of issuance of licenses and other elements?
Yeah, thank you. We're very, very excited to ring the bell. The exchange will ring the bell, will officially launch the exchange and the trading platform. We're very excited for that. We've licensed the exchange. We've given them 2 licenses, one for the exchange license and another one for the OTC or over-the-counter market license. It will help us to have both kinds of tradings in terms of the platforms, in terms of the natures of the securities we want to trade on the trading platform. We have also other intermediaries that are necessary, moving components of capital markets. So far, we have issued licenses for 3 investment advisors. We have different categories of license on the pipeline. We have a lot of applications. Because we're coming near to the launch of the exchange, the interest from the public, the interest from the potential issuers, the interest from potential intermediaries have significantly increased, especially after the IPO of Ethio Telecom. This interest it has shown the commitment of the government, because Ethio Telecom is a state-owned enterprise. They are committed for the regulatory frameworks from ECMA. They've been working closely with that, and they have issued their shares for local investors, retail investors. It shows a lot of commitment from the government side and the issuer side, that they have a huge confidence in the potential of the retail investors in Ethiopia. So from that point on, the interest from local and international participants have significantly increased. So even in the coming weeks, we hope to license a few more participants in the market. But we're very excited for the launch of the exchange.
Thank you so much, Hana.
Thank you so much.
That is quite a huge milestone. Maybe you could expand a little bit on that, on what it actually means.
Well, it means that, again, the objectives of the reform program is being met. One of the clear objectives of the reform program was to try to increase export receipt, to increase, FX influence the economy. And if remittance is growing, if export is growing, then private sector businesses will be able to get the foreign currency that they need to increase their productivity. Think of it in terms of the manufacturing sector. I would say, if you talk to an owner of a manufacturing plant in Ethiopia, in the past, they used to tell you that they operate literally at half their capacity. If you ask the reason, most of them will tell you that it's because they don't have the inputs that they need, and they don't have the inputs that they need is because of shortage of foreign currency. So if you address the foreign currency needs of private businesses, then that will do wonders to the productivity of the productive sectors in the economy.